Hey, good morning, everybody. Today is Wednesday, August 16, 7:27 a.m. Eastern Time. So just let's review the market structure for today. Delta strength above 40, weakness below 35, and neutral 38. Per levels, you're not showing us any movement at all. Spreads between puts and call deltas is really wide, as you guys have been seeing since the last week. Difficult to tell you who is buying call. Looks like that retail don't have any fear in the market. Zero fear. Retail keep buying calls, right? In the meantime, dealers start to build a negative delta position. Could you be a hedge from their long? Yes. Remember that since last week we were in a gamma imbalance. Even in 30 days we have negative gamma. Long term is positive gamma allocation, right? That's we call gamma imbalance. Now we start to see the imbalance is gone because dealers start to hedge themselves. Okay, levels are already placed. So DIX and GEX, in my humble opinion, could you be a setup for a future squeeze? Because DIX jumped to 51%. It's very difficult to analyze market with DIX and GEX because sometimes when you see the DIX spiking, could you be also, dealers start to close their short in future, because if they are long, right, they need to hedge the long, selling the underlying asset, in this case future, right? So sometimes could you be, dealers start to close future, start to be long in future because they start to have negative gamma, and then at some point we will see a squeeze. Note that GEX is still positive but below 2 billions, means they start to accelerate the market. So those crazy movements in higher volatility is totally expected during the intraday, okay, and totally normal because this is the setup. Okay, so what I saw for today, I know that a lot of people still buy calls. I'm not saying that it's wrong or even correct. So I'm saying that the current flow is bearish, right? We need to go, we need to follow the flow and never go against the flow, right? The flow is the important thing that we need to track to try to identify the direction of the market. People that start to play against the flow tend to lose money. Remember, market's not a casino. I'm seeing a lot of people still playing casino. So, market's not a casino. Market is pure fundamental, pure structure. Market is not economy, market is liquidity. As I have been saying, even the Federal Reserve keep inflate the bubble, keep inflate the balance sheet, the banks nowadays is refusing to provide loans to retail. So who cares if central banks keep providing liquidity, but how can I say, the end point that are the banks are not allowing to those monies going to public, going to the economy. So Federal Reserve, central banks nowadays are only helping big corporations. They are not injecting money to the economy. They are injecting money to big players to save their companies. Period. Period. That's something that nobody's understand. You guys already see the crisis already starting in China. It's a credit crunch. They are not able to pay their debt anymore. Remember that I cited, I guess yesterday or Monday, in the chat, comparing everything from 1968 up to 75 to current moment, even the yields, because the yields that time spiked to 50%, huge inflation, low unemployment, war, and then we saw a recession. We don't need to go to Harvard to understand, to fix things. The world needs to enter in a recession because the cost to borrow money is going so high. You guys already saw the mortgage 30 years mortgage already jumped to above 7%. Who is willing to buy a house with those prices and rates? Nobody. Need to collapse. Recession, right? We don't need to go to Harvard to understand that. We really don't need to Harvard to understand that. But the general public is still bullish. A lot of people still buying commodity. I don't understand the call regarding commodity because commodity is still nearby the all-time highs. Look at oil. Iron oil is already starting to dump, but it's above 90. Iron ore is good to buy commodities when you see iron ore print 30. As you saw back in 2013, Petrobras 50 cents, Vale couple dollars, $1 if I'm not wrong, FCX if I'm not wrong was $7. It's because the commodity sunk. I really don't understand the people looking to buy commodities that's in the middle of the way to try to back test the major support, right? So it's too much risk. Also, we have a higher dollar, higher yields. We are in a risk of environment. If you guys want to try to play long term, look for fixed income. Look for fixed income. Anyway, delta levels already presented, right? For 40 strength, 35 weakness, 38 neutral. Huge spread between call and put deltas. Net delta is totally bearish. Flow is bearish. Okay? DIX and GEX is trying to show us a pattern that dealers want to squeeze later bears in some point. Could you be this week? Yes, could. But this usually is a setup for a squeeze because the GX jump and they accelerate the market, removing the book and allowing them to move the market without put too much money. Okay, usually is a squeeze pattern. If you saw drop GIX and drop GX, both walking the same size, so usually is a I don't like to say crash, right? But usually it's a crash pattern. Here is more like a squeeze pattern. Okay? If you do it, I don't know, but that's the pattern. Regarding today, I saw somebody that already set up a resistance at 51. Since we close at 37, so those orders, expect and they you defend a 20 points spike going up to 4,451. Somebody at 943 at the open when SPX was trading at 4,478. Somebody bought $7 million, $7.7 million, strike 4,474 today. Okay, they bought 4,240 contracts. So this player will defend 4,451. These players look for a maximum spike and a resistance at 4,451, because that I notify you guys through the close WhatsApp chat early in the morning as well. Also at 10:30, somebody sold 4,500 call at 242 and bought 4,500 put at 51.30. So the break even at this person, since he sold the call to finance himself, also is 4,451. That's also for today. I put the spreads over here. So somebody is looking for a maximum 20-point spread at least today. If we now, how the future is indicating? The future is indicating is you open flat, right? If you open flat and you start to see 4,500 puts and 4,407 being unwind, so markets tend to go up, then we need to look for DIX and GX for a possible squeeze. Market open flat and 4,470 and 4,500 put contracts start to be unwind, we tend to see a squeeze. Okay, that's what you need to monitor today. 4,470 and 4,500 put contracts. I also put in the summary resistance 51. Bears, I told you that's not my call, but as a bear, if you are a bear, you will love to see a 20 points gap up and then you close the gap and continue the movement. I said, not my call. This is what I love to see only. I put clear over here. That's what where everybody that have negative delta in their portfolio love to see. Gap up, close, and continue. So far, we're not seeing that. We're seeing like a flat market. So a possibility because the GX and DIX have a bullish pattern, a price acceleration for intraday, we could see market to open flat, and then you need to monitor 4,500 puts and 4,470 put. If you start to see unwind those contracts, markets is ready to spike and you squeeze later bears. So 4,450, 4,420 is the first level of support per option book, but very fragile, tends to be breaked easy. If those levels, if XPX lose those levels, much certainly we will backtest 4,385. But remember Monday market wrap. This is the Monday market wrap. And the big doubt that we have is the 4,050 call $126.940 million premium, break even 4,367. I don't know if this person sold and look for delta decay or if this person bought. So if he's bought, so for sure he starts to buy at 4,385 to bring market back up, right? And at the end, he will make a lot of money with this contract. So maybe this week bottom could be something nearby 4,385. That's where we have delta -1. So maybe, maybe this will be the bottom of this week. But in another hand, if he sold as soon market, backtest 85, he will add some sell pressure to receive $126 million. Remember that 4050 AM expiration Friday still have open more than 5,000 contracts. So this player didn't close yet. The contract is still there. Okay? So we need to look for 4,367. As soon market backtest delta minus 1 at 4,385, if we see a defense there, is because this player bought the contract. And consequently, totally makes sense, we see a squeeze pattern printed by DX and GX. Guys, take care.